I've actually wanted to have this conversation with you um, before the last pump with MicroStrategy. MicroStrategy has been doing crazy numbers, but I mean, of course, it's come down a little bit. I think this is really what shows people that we are convicted because of the fundamental stuff, not just the numbers, not just the price. The most important thing that I want you to teach my audience is how to conceptualize MicroStrategy, how to help them understand it a little bit better. Is there anything you want to maybe start with? Anything that you want to go into first?
Yeah, absolutely. And it's been a really exciting day. I mean, you get Bitcoin breaking over 100,000 last night. I mean, it's a big milestone, right? People have been waiting for that for a very long time. And obviously, MicroStrategy is going to become a really significant topic out there across the internet and on most of the mainstream media channels as well, just
Yeah.
because they've been so in front of this entire move that they saw what Bitcoin could be long before most of the general public ever did. So I think we're going to start seeing a significant amount of coverage start coming up beyond just what we've all been doing out here on X. But it is a little tough for people to conceptualize this trade. I've seen this be a very difficult concept for people to grasp, and I understand it because it's a big departure from what traditional finance has typically shown us in terms of how you're going to value a company. And that's what people struggle with. Everyone seems to understand that they buy Bitcoin, the Bitcoin goes on the balance sheet, Bitcoin goes up, MicroStrategy does well, right? People can grasp that. But what I think that a lot of people are missing is looking at if you were going to take the MicroStrategy playbook and apply it to your personal life, what does that look like? I find that's usually the bridge people need to gap to understand what's happening here. And so what I've been trying to help people with is if you look at your own personal finances, right, you've essentially got two categories that you're going to focus on. One is going to be your income, right? Your salary from your business, whatever that is, you've got the income side. The other side is going to be your net worth or your balance sheet. And corporations are really no different, right? There's a lot of fancy terms that fly around for all this stuff, but they've got an income statement, the money that they make, the money that they keep, and they've got a balance sheet, which makes up the shareholder equity of the company. So if you look at MicroStrategy like you were putting it through the lens of your personal life, what you've got to make the shift in your mind of doing is going from what traditionally we've been told, which is focus on the income, make your income higher, right? Get to 100,000 a year, get to $200,000 a year. Everyone's been kind of conditioned that income is the metric for success, and that's how you generate wealth. But that's not necessarily always the case. Because while, yes, that side's very important, and particularly for the early stages, and this is the same for companies, but in your personal life, it's very important to focus on that income component early. I always say for at least the first decade, you should hyper focus on getting that higher because that's what's going to build the assets that end up on your balance sheet. And MicroStrategy was the same. They started with the BI software business. They put everything they had into growing that for a long time. It kind of stalled out, but they built a really good business that was providing them with a lot of income. They just didn't have any other ideas for what to do with it. So the shift that they made is what a lot of people can start to make mid-career, which is you start to focus on maximizing the assets you have on the balance sheet. And how do you use the strength of your balance sheet to generate wealth versus spending all your time focusing on your salary, getting a raise, cutting your expenses to increase your take-home pay. It's that shift in mindset that is what MicroStrategy is doing in the corporate world. They shifted from, okay, we're not going to put all of our focus and energy into just growing our software business. They're obviously still focused on it. It helped to drive the whole strategy early on. But what they saw was we have a remarkably strong balance sheet. We're unencumbered. We don't have a lot of debt. That gives us a lot of flexibility. So instead of trying to maximize and only show earnings through net income or an earnings per share, they're saying, how do we accumulate more assets on the balance sheet? Let's use what we have there. That's a tool for us. And let's start deploying those assets more intelligently so that we can capture value on the other side of the equation that most people skip over. So it's very similar to people that have a lot of investments where all of a sudden, if you've got those investments focused in the right places, you can very quickly start to get to a point where you eclipse your income. And that's what MicroStrategy is doing now. They've leveraged that power and their focus has shifted to let's deploy these assets the best way we know how. They chose Bitcoin for that as the asset that's the foundation, and let's start to generate value there. Now, they've got some other things that are a little unique to them, obviously, right? Because they can interact with the capital markets, which is where you hear all these terms like using convertible debt, using leverage, using the ATM, right? They've got all these tools in their toolbox that they can use to push this strategy forward and focus on their target, which for them is building more Bitcoin per share. And for your audience, I don't know how focused they've been on MicroStrategy, but essentially what that means is you're looking at the total number of Bitcoin that MicroStrategy holds divided by the total number of shares that could be outstanding. It includes shares that aren't issued yet. So that's the metric that they've chosen to focus on as their KPI. And so what MicroStrategy is doing is they're looking at using all the tools in their toolbox to find the best ways to accrete the most value on that balance sheet back to their shareholders. And that's a big shift for corporate finance, because that earnings per share metric, that's a tough one to break, because that's how the markets have focused in particular on growth companies for decades now. It's all about that growth trajectory in your earnings per share. But what people miss in that is that earnings per share, while it's a great number, what they forget is that you have to constantly be growing. So that capital that comes in, that income you made in earnings per share, has to be redeployed almost immediately. It doesn't stay with the company because they have to continuously invest in growing the operations of the business so that they continue to show the market higher and higher revenue numbers, bottom line numbers, ultimately earnings per share numbers. And if they don't hit those metrics, they start to lose their status as a growth company, and that starts to crater on the valuations. So those are the things that a lot of people struggle with in the early days when they're trying to figure out what is MicroStrategy? What are they doing? And they're really twisting people's minds away from the earnings per share. And they're saying, we're generating a yield as well. Our yield is done in Bitcoin. But the difference with our yield versus your earnings per share is rather than having to redeploy that yield out to go spend money on sales forces and building facilities and doing R&D, the yield we capture lives on the balance sheet indefinitely now. That's value that's captured that lives in the financials and can continue to perform quarter over quarter for the shareholders. So I think that's a really big shift for the markets to digest. And I think it's going to take a little bit of time. But the attention they're getting now, people are going to start catching on quick.
Yeah, I definitely agree. I think you hit a lot of great points there. Focusing on increasing your income and then decreasing expenses, and then just putting all the difference into something that can give you basically passive income. That's the life hack, right? That's the hack where you get all your time back. That's something that I've been focusing on a lot on I was focusing on a lot on Twitter. Over time I transitioned to just posting about Bitcoin, posting a little bit about MicroStrategy here and there. My audience does have a pretty decent understanding of the Bitcoin per share. I've been explaining it. I maybe they've been watching my videos, maybe they haven't. But can you explain to somebody, let's say for example, if they had a choice between buying a company that already has a business that's operating and doing really well, like Microsoft, for example, instead of Microsoft, why should they buy MicroStrategy? Because Microsoft already has this business. We already know that they're going to continue to have these customers. These customers are already working with them. They provide a product that people need and they'll probably need for a very long time. So why should anybody go with investing in MicroStrategy over Microsoft, over Apple, over pretty much every other company out there?
Yeah, well, for starters, to invest in MicroStrategy, you have to have a foundational belief in the success of Bitcoin long term, right? That's very foundational to this investment because that's essentially what their whole thesis is here. We're watching the emergence of a new asset into the global markets, and we're starting to see that penetrate into all different areas of our lives. We're starting to see it now creep into politics within the US, which is a much bigger deal than people really thought it was going to be because the US currently holds the reserve currency of the world. So for them to start discussing an alternative asset like Bitcoin is a huge development. That shows just how big Bitcoin has gotten globally. So for MicroStrategy, that has to be your foundational belief. You have to start there. If you don't believe in Bitcoin, Saylor says there's a trade for everybody in MicroStrategy. Because if you love Bitcoin, it's a great trade. You can go long, you can buy calls, you can do all kinds of trades there. If you hate Bitcoin and you think it's going to fail, you've got options there as well. When we look at some of these other companies like a Microsoft, make no mistake, these are valuable companies as well, right? They are so ingrained in the lives. Anyone who has a corporate job has come across a million Microsoft products, right? They're a very strong company. They've built themselves this niche within the corporate world that's going to be very tough to break. So they've got long-term stable growth that they've been able to achieve, and they really understand their consumers. So I don't see any of those as being bad investments, right? There's a lot of nuance out there in investing where you do have a lot of people that are looking at one investment and going all in on it. I think there's still other good options. But when you're looking at a company like Microsoft as it pertains to a Bitcoin strategy, which has been hitting the news recently with Saylor giving his pitch to the MicroStrategy or to the Microsoft board, it's a little bit different because when he's pitching Microsoft, he can't pitch Microsoft the same strategy that MicroStrategy can use. And the reason is because Microsoft is a fundamentally different and much larger business than MicroStrategy was to begin with. So for MicroStrategy, they had to invent a new product for the markets, right? And that was enhanced volatility. They were taking an asset like Bitcoin that's already volatile, putting it on their balance sheet in a very significant way. For MicroStrategy's strategy to work and to be deployed for any other company, you have to have a unique setup where you've got an unencumbered balance sheet that you can now skew largely in favor of holding Bitcoin. And then if you add that additional leverage to the balance sheet, you start to get the enhanced volatility. Well, Microsoft's a little too big for that type of a play. But what's going to be very important for some of those companies is they're going to have to look at all this cash that they're starting to hold on to and figure out what really is the best way that we're going to be able to deploy this capital to generate value for our shareholders. And traditionally, that means that they've had to just pivot. If they're out of ideas for growing, which is essentially what a lot of these companies are admitting, they start issuing dividends. They just start giving the money back to the shareholders because they're saying, we don't have any better ideas to generate new value for you. So what we're going to do is we're just going to give the money back. And they'll do that either through dividends or they'll go buy back the shares themselves of the stock, which enhances the shares that other people are holding. So those are the traditional signs you start to see in companies that are reaching that, that scale where it's very tough for them to grow. But now they're sitting on piles of cash. And the pitfalls with cash in the US dollar and currencies around the world are pretty well known, right? I mean, the value's eroding out of those very quickly, and it's a very fine line that governments are running in terms of how they're managing their inflation numbers. So if you're a company that's holding $80 to $150 billion worth of cash on your balance sheet, like some of these giants are, you're going to start to have a decision to make. You've either got to dividend that out and just get rid of it because there's no value to you holding it and sitting on these piles of cash, or you have to look at evolving the way that your company views the world. And that's where I think a lot of these companies are going to start focusing now that MicroStrategy's shown the success of their model, is they're going to start looking at Bitcoin with a different lens. And that lens doesn't need to be that their company has to change the entire being of who they are and pivot fully into a Bitcoin treasury company, and particularly a leveraged Bitcoin treasury company. But what it might mean is that all this excess capital, they've got a new way to deploy it. They can get into an emerging asset that's showing the strong signs of adoption globally, not just within the US, and they can now own a piece of that ecosystem. And so if they have cash with nothing else to do, they can buy an asset that will continue to perform for them. And when you're talking about $80 billion, getting a return on $80 billion is a very significant number, particularly if you keep seeing the 29% CAGR that people are projecting forward. If you start seeing those types of returns on $80 billion, that's significant shareholder value creation. And we're reaching the point now, and particularly since we got over that hurdle of 100,000, I think Bitcoin's going to start to become undeniable to these corporations. And if you see nation states really adopting this, like we've started to with the BRICS nations and some of these other countries like El Salvador, when you start seeing that level of adoption and it's working itself into the global financial system, it becomes a safe investment for a company to make, right? You start to see the protection that's there. It's no longer that one country can crush the value of this asset. Now, if the US decides they're going to go and put out some political attack on Bitcoin, you're attacking another country's currency. That's a very different thing to do than it was when Bitcoin was just off on its own and it wasn't being acknowledged by countries. So I think for the corporations, when you're looking at investing in them and when they're looking at investing in something like Bitcoin, those are the types of thought processes that they're going to have to work through to determine what's really the best use case here for our shareholders for us to continue delivering value to them. If we want to continue to grow and be a part of this conversation and not just shift and say, we're going to run a good business until it's no longer good anymore, and then we'll disappear like so many companies before us. They got a short window now to make that pivot.
Yeah, you made some really great points there. I made some notes on my phone. I was just looking down on my phone. So you said how you need to have the fundamental understanding of where Bitcoin is going to first of all just believe where MicroStrategy is going. If you don't understand Bitcoin, you're not going to understand MicroStrategy. So 99% of the world, maybe 99, maybe less, maybe a little bit, 95% of the world has no idea where Bitcoin is going. So they just don't get it. So you also mentioned how MicroStrategy is creating a new product, and you mentioned enhanced volatility. Can you explain enhanced volatility and how the new investor who's coming into the market and they're trying to see what this is? They're used to these digital products. They're used to these physical products. They're not used to a company coming out and basically creating a brand new market. They're used to companies just either improving a market, maybe providing new products and just improving on a product that's already existing. I think MicroStrategy, like you said, created a brand new product that nobody else has, and they have this monopoly. Can you explain what you mean by enhanced volatility?
Yeah, absolutely. And it is an interesting discussion because what you have to realize about what MicroStrategy is doing is they're being very methodical about how they're engineering this, right? And what they're doing is they're looking at the segments of the capital markets that have a lot of capital to deploy who can't come to Bitcoin. And they're finding out ways to create products that these institutions can buy. And MicroStrategy becomes the loading dock for that capital to enter into the Bitcoin markets. So what these people need, right? And we're talking about, like hedge funds. You'll hear the words convertible arbitrage desk, right? Well, what those convertible arb desks can do is they can buy convertible debt. But that's really it. That's the whole charter. They're only allowed to trade that. So when you look at the other corporations that have been putting out convertible debt offerings, the volatility on their stock, which is essentially the significance of the moves up and down, right? And that's an important point, up and down, is very low. So when we talk about volatility, a normal stock is probably going to have a vol of 20 to 30 maybe, right? If it's got some volatility to it. Bitcoin is usually going to be like a 50 to 60. MicroStrategy has recently been sitting at around 110. And what that means is that stock's going to move significantly in both directions. Well, if all you can do is buy convertible bonds, what these people need to be able to do is do what's called trading the delta. It's called delta hedging. And so delta is essentially the sensitivity of the bond to the price movements of the stock. So if you've got a 70 delta, that means that it's going to move about 70% as much as the stock is going to move. And what's important about that is they need the volatility to go both ways so that during the course of holding this bond, they can capture the movements, right? If you think of it very simplistically, they're really just using a sell high, buy back low methodology throughout the cycle of holding these bonds. And they can do it because the bond has a call option to it, where it essentially becomes like equity the higher the underlying share price goes. So what these guys are hoping for is that they get these really strong run-ups in the share price. They can start shorting the stock, right? That's how they put their hedges on, is they actually short the underlying equity. So they're selling the shares that are essentially tied to their call option as the price goes higher and higher. And then they want that volatility to drive it the other direction. Now they want it to go down. And when it does that, the bond sensitivity is lower the lower that price goes, right? So the stock could keep moving down at a rapid pace, but because that bond has a par value, it slows down its descent. And so they're going to be able to buy back those shares, close out those short positions at the lower prices. So they're capturing that inefficiency in the difference between how bonds move and how the equity moves. That's what those guys are doing. It's a more sophisticated discussion than that, right? There's a lot that goes on behind the scenes, but that's the general overview of it. But what's important is that those institutional level capital allocators have a charter that only allows them to buy convertible bonds. So what Michael Saylor figured out is that capital's never coming to Bitcoin on its own, right? They can't do it. Part of their charter is not buy convertible bonds or buy Bitcoin. They can buy convertible bonds. So what he started doing was taking this Bitcoin that they've got on their balance sheet, and he's providing a mechanism to securitize Bitcoin to these institutional investors. And he's giving them an on-ramp to get exposure to Bitcoin. So when they're trading bonds that are trading more volatile than Bitcoin itself sometimes, that's a whole different level of profitability that convertible bond traders can achieve than they can do with a stock that doesn't really move all that often. And you're seeing that in these convertible bonds and how quickly they're reaching their conversion prices. Like I do a tracking pretty much every day at the end of the market close where I'm tracking all the convertible bonds that MicroStrategy's issued. And there's clauses in there where these guys can convert those bonds into equity well before the maturity date. It's called the 130% clause, which basically means if the stock trades 130% above the conversion price for 20 days out of a rolling 30-day period, those bondholders can now reach out to MicroStrategy and convert into shares if they want to. There's reasons why they would or wouldn't, right? A lot of it depends on how far beyond that conversion price they are, because if they're fully shorted out the equity position of the bond, there's no more upside for them. So they might just want to convert into the shares and reset and hope to get into the next round of convertible bonds. But what's interesting with MicroStrategy is all but one, right? Just the most recent, the 2029 bonds that they just released. Those are the only ones not in a countdown for early conversion. 3 of them are already eligible to convert. Those bondholders can call MicroStrategy at any time and say, we want shares now. And the only remaining 2 that are in a countdown but can't convert should be eligible to convert by next Wednesday. So by next Wednesday, you might actually have a position on MicroStrategy where 5 of the 6 convertible bonds that they have outstanding right now are all eligible to convert. That can clear the entire debt off the balance sheet, with the exception of the 2029 bonds, if those bondholders elected to convert early. It's not to say that they will, but it's a possibility, and it's a very unique possibility because some of those bonds just got issued like 3 months ago. So for something that you're actually intending early on to not be able to achieve your conversion price for 4 years, 5 years, 6 years, to achieve an early conversion trigger within, call it sub 6 months is wild in this world, right? That doesn't happen very often. And what that's going to do is it gives MicroStrategy the ability to delever, right? It takes debt off of their balance sheet. And that gives them the ability to go back to the capital markets and say, look at how well our bonds performed. Now we're going to issue new bonds, but the terms are going to continuously turn further in our favor. And we saw that with the most recent offering where they got a 0% coupon rate, which means they have no interest carrying cost on those bonds for the entire term, which is very unique. But we're starting to see it more with the Bitcoin bonds. We've seen it with some of the Bitcoin miners as well. And if he gets that debt off the balance sheet, given the fair market value of the Bitcoin that they hold, if they're targeting a leverage of 25%, meaning they'll borrow at any one time 25% of the fair market value of all the Bitcoin they own, that means he might have a lot of space here to go out and issue more convertible bonds in the next couple of months. So it's going to be very interesting to see how that all plays out.
So when you say that they short shares with their bonds, does that mean that all of the sell pressure is already gone?
It means a lot of it's gone. Yeah. So it all depends on what the delta of the bond is when it's issued, right? So right away when it's issued, what you'll notice during the pricing period of the bonds, which is usually a 1 to 2 day period where they're taking a volume weighted average price of the shares, during that time period, most of these convertible arbitrageurs, they're putting on their initial short positions. And those initial short positions could be 60% of the shares that are associated with that bond. So that means before that bond offering's even closed, 60% of the shares associated with it might have already been sold, right? Because when they convert, what they're doing is they're receiving the shares from MicroStrategy, but then their broker's just netting out their short positions. So there's a misconception out there that when these bonds convert, that there's going to be this immediate sell pressure in the market because all these new shares are coming. But that's not true. That sell pressure happened all along the path up to where they converted. By the time they're ready to convert these shares, they're going to get rid of any equity risk that's left. So they're going to be fully short the equity position of the shares that they're going to get. So once they get those shares, they're just netting out two positions that equals zero. So they don't have to go sell new shares. So there's a lot of fear out there anytime that people hear that the bonds are going to convert. But it is a little misguided because that's not the mechanics of how it works. They've been selling all along the path. So most of that sell pressure happens early. The last, 40% of it might happen over a period of a year or two. But what's interesting is as the share price gets higher, there's less and less shares that are getting tied to these convertible bond offerings. So as the scale continues to ramp up, we might actually see less shares even available to get shorted with these offerings, which could also increase the volatility, right? Because we have to acknowledge that the shorting that these convertible bond guys do and taking off the shorts can dampen the volatility at the extremes, right? They can stop a blow off top because now they're going to short because the deltas climb so much, but they'll also soften the drawdowns because when it gets drawn down, they'll start buying back and closing out their short positions. So they do have that impact, but that's probably about 80% of the people that are buying these bonds are going to be those convertible arbitrage guys. You can see it in some of the 13Fs, but there's also a component of people that are getting long only exposure, and they basically want Bitcoin exposure with cap downside, right? So you're starting to see companies like Allianz, right, an insurance company coming and buying these bonds. They would fall into that long only category where they want the upside exposure to Bitcoin, but they want to cap their downside, right? And if they go buy Bitcoin, that can't become a part of their collateral as a company because regulations prevent it, but corporate bonds do count. So it's kind of this, this gray area that they get to play in where they can buy convertible bonds that are tied to the performance of Bitcoin without actually holding the Bitcoin. And they've got the downside protection of the par value of those bonds in the event that they believe Bitcoin's money good at maturity. So it's very interesting to see the developments here in terms of who's buying the bonds. It's always interesting when the 13Fs get released to see who's holding on to this paper, because we're seeing a bit of a shift in the profile of who the buyers are.
I'm just trying to think through what you're saying here. So you're saying that, would you say that they're basically creating synthetic Bitcoin?
Kind of. Yeah, they're creating synthetic Bitcoin exposure for sure.
And then
right?
and then when MicroStrategy uses the leverage, they get the upside. So MicroStrategy gets the upside. So who deals with the downside? If let's say, okay, I don't want to put you on the spot here, but I've actually been
Sure.
asked this question a bunch of times. What would happen to all of this if Bitcoin's price? I don't think it'll happen, but let's say my Bitcoin's price drops 80%.
Sure.
What would happen to all of this?
So nothing until a maturity, right? So one of the misconceptions that's also out there is everyone's looking for this margin call or liquidation price that's associated with these bonds. There isn't one. It's unsecured debt. There's no liquidation price. So if the price draws down, the risk that you do have with MicroStrategy is really point in time risk, right? You're looking at the maturity date of whatever the nearest bond is. And your risk is a black swan perfectly aligned with the maturity of the bonds, where now MicroStrategy has to go redeem for cash because that call option has no value, right? The bonds were busted. So now they've got to go and redeem for cash. That's when you start to get into the conversations about, well, what are they going to do in that scenario? Are they going to go and sell Bitcoin? Because they've stated pretty openly that that's not their intention. They're not intending to sell any Bitcoin. But that's what people are looking for. So if you look at an 80% drawdown, part of it depends on when. When does the 80% drawdown happen? And how long is the 80% drawdown sustained, right? Because they can probably handle, one maturity where the Bitcoin price is way down. But let's keep in mind, the Bitcoin price has to be way down. One metric that people can look at to start to get themselves some comfort around this is you can take the amount of debt that they have outstanding divided by the number of Bitcoin that they hold. And that's kind of your break-even point, right? That's where your Bitcoin would get you out of all of your debt completely whole. And right now, that price is around 18,500 a Bitcoin, something in that range. So it's a big drawdown from where we are today. But then you also have to layer on the fact that MicroStrategy does employ risk management tools here, right? There's a reason why only one bond ever matures in any given year, right? They use a ladder strategy where they'll essentially put out 5 to 6 bonds, but they'll all be in different years. And as some of these mature, or not mature, but convert early, you'll see them start to roll that debt further into the future. So, for instance, the 2027 bonds are coming due. Right now, that's the closest bond to maturity that we have. Well, if those early convert, I don't think they'll replace another one in 2027. That's too close. So you're going to start seeing these get pushed out further into the future. And what that's doing is it's allowing continued time for Bitcoin to evolve as an asset class, for the use cases to show up in the financial markets for how corporations or nations are going to use Bitcoin. And it's giving them the ability to ride out cycles. So you might have a scenario here where they won't have a single maturity for the entire next Bitcoin cycle, right? Their closest one in a little bit here might be the 2029, which is the end of the next 4-year Bitcoin cycle if they repeat, right? You always got a caveat with that. We don't know, right? People are mentally preparing for it to repeat, and you might get some drawdown just because people are anticipating, so they might put some sell pressure there. But if nation states come in and start buying, we're in a whole different conversation. So MicroStrategy is continuing to push this out further and further. The other fear that people get into is right now, when we're looking at why MicroStrategy is so valued, is because they're essentially a growth company. It's just a non-traditional growth company, right? Because they're not focusing on the growth of the earnings per share. That's not what they're, until FASB fair value accounting comes, you'll start to see the valuation of Bitcoin start to hit the net income. But on the operations of the BI business, that's not where that growth's happening. Where it's happening is in the return, the Bitcoin yield. And so people are struggling with what happens if that slows down, right? If the price of Bitcoin skyrockets and they can't accumulate as many Bitcoin as they've been able to accumulate, particularly over the last year and maybe even the last 6 weeks, right, where they've accumulated huge amounts of Bitcoin, what happens then? And I think a good exercise for anyone who's going to invest in the space to do is you have to evaluate what you think Bitcoin looks like in 5 years and 10 years. And you have to determine for yourself whether you believe there's going to be any other use cases for Bitcoin other than storing value. And when I look at it, I go, well, maybe the growth slows over the next 10 years, right? Maybe we don't have the same explosive growth that we're seeing now, because this seems very intentional in terms of front running the adoption from some of these bigger buyers who are buyers at any price because they're buying with a currency they create. You don't have to be price sensitive in that scenario. But when that ultimately slows, you're balancing that with, is there going to be a way to deploy it, right? Is there an end state for accumulating this much Bitcoin where you now actually have uses for this, right? Beyond storing value, which is kind of the core use case. That's why people compare it to gold so often. Well, my argument typically is if this is getting adopted by corporations, it's getting ingrained in Wall Street, you've got nations that are starting to talk about settling trade with it, right? That creates so many uses for Bitcoin that the products for that are going to come now, right? Because there's going to start to be that demand for accessing this type of an asset. Well, who's going to be one of the largest holders in the world of this asset? MicroStrategy. So you're looking at what are the odds in the future that there's going to be monetization opportunities for this. Now, I'm talking a ways off because I don't think they're out of runway for growing the Bitcoin yield for quite a while. They've got a pretty good thing going right now. There's still not a lot of competition in the market for it, although it's starting to show up because people are starting to not be able to ignore the performance. But if you run the math on if they could even earn 0.25%, say they've got their 400,000 Bitcoin at $1 million of Bitcoin. If you earn 0.25% yield on that in a year, what does that put to your bottom line, right? It's close to $1 billion. So, when you start to look at that, if you think that there's a scenario where there are those use cases, you've got to evaluate that in terms of whether this is an investment that you're willing to hold long term. Because you've got to look further down the road than 1 year, 2 years, even 5 years, if you're starting to look at what assets do I want to hold for the next 2 decades, right? What does that look like? And a lot of that is going to be tied to the evolution of Bitcoin globally. So there are risks, right? Nobody should be under the illusion that there's no risks to this strategy, right? But it's largely focused on that point in time maturity risk of the individual bonds. And they manage that a little bit with the other tool that they have, which is the ATM. And what people seem to misunderstand about the ATM is, yes, they're selling their own equity and raising capital with it. But what's different about that is there's no debt beyond that. So it's permanent capital. It's capital that they capture immediately that they move to the balance sheet. They can lower their leverage ratio simply by using the ATM, buying more Bitcoin, which increases the fair market value of the Bitcoin on their balance sheet. So it's a delevering tool. So a company like MicroStrategy, they're not tied to one specific leverage ratio. I use 25% because it's kind of what I've seen them oscillate around. But the reality for them is they're going to be a range. Their target's probably 20 to 40%. And in a bear market, you'll start seeing that leverage climb closer up to 40%. And you might see them then deploying the ATM to bring that leverage ratio back down, right? A lot of people think they're super levered as a company, but that's just not true, right? They're probably less levered than most corporations that you see. And so 25%, imagine you're talking to a friend who's just bought a house and he goes out and takes a 25% mortgage on his house. Are you looking at that friend as financially reckless and overly levered? No, right? Not really. So that's kind of what you've got with MicroStrategy, except it's Bitcoin's the asset. It's not a home, right? So it's a little bit different, but that's how I like to conceptualize it so people can understand when they're saying how risky this is. That's essentially what you're looking at. You're looking at the leverage against the asset that they're holding, and they're baking in a lot of room for flexibility here.
So I have some I guess some pushback on that. I don't know, maybe I'm understanding this wrong, but you said
Sure.
during a bear market they can go back to the ATM, they can sell shares and buy more Bitcoin, increase the value of the Bitcoin that they have. Because of course, when they buy Bitcoin, the price of Bitcoin goes up. Wouldn't their shares no longer? I mean, if Bitcoin drops significantly, if Bitcoin's price drops maybe 80s, 90%, I don't think that's going to happen. But let's say it does.
Sure. Yep.
Won't the NAV premium on their stock go down, meaning that they no longer have the same effect of, let's say, for example, when the premium is 3 times, so they're able to sell these shares that are basically worth 1 Bitcoin, and they're able to buy 3 Bitcoin and put it on their balance sheet. So they're basically like Michael Cero said, we're selling $1 bills for $3.
Sure.
When that NAV premium drops, let's say it drops down to, I don't know, during a bear market, it could drop below 1. Right? Would you say? I mean, I think that they would actually. I don't know how would they sell more shares at the market to.
Well, if it goes below 1, they're not going to, right? So this is
Right.
part of a managing on the way down, right? If you're talking depths
On the
of
way
the
down,
bear
okay.
market, I agree. Depths of the bear market, no, they're not going to be using the ATM if the NAV is anywhere near 1, right? It's got to be above 1 for that to continue to be accretive. If it goes below 1, they might look like, say they replace a lot of these bonds with 0%. They might still have cash flow that comes from the operating business. In the depths of a bear market, they might go back to traditional debt. Right?
Yeah.
If they've got strength of cash flow, that might be the tool that they go back to. But it depends on where they're at on the risk, right? So say we go into a bear market, next year, which is supposed to be the bull market, but let's just say hypothetically for 2026 even. Let's say we go into a bear market in 2026. and Bitcoin draws down 80% and sits there for a year, right? What happens to MicroStrategy? Well, the share price goes down for sure, right? That's a given. If Bitcoin goes down, MicroStrategy is going down as well. That's just a reality. But nothing tragic happens because there's no convertible debt maturities in all of 2026. And if they have no coupon payments to make, they're just waiting. They're in a waiting period. So then you get to 2027. Well, those bonds are most likely going to convert. So there might not even be anything in 2027. So that Bitcoin price can stay down 80% for 2 years in a row and nothing happens, right? MicroStrategy doesn't go out of business. They're not getting margin called because there's no bank. They have no covenants on this debt. So it's not like you have a debt service coverage or a collateral requirement coverage. It's all unsecured. So they're just waiting. So your black swan event is that happens, but it happens for 6 years in a row, right? Where they've got to redeem all of these bonds for cash. And if they can't go borrow the cash from a bank to not sell Bitcoin and say, we're just going to borrow right now, we're going to clear this convertible debt. And then when more favorable conditions come, we'll go reissue convertible debt and we'll clear the bank debt, the traditional debt out, right? They're going to be more strategic than people think. People think that there's just this immediate need to immediately liquidate Bitcoin and cause this spiraling effect, right? Which would be a concern if you had a big seller like MicroStrategy that had no options left but to sell all their Bitcoin into the market, right? That's a bad scenario. But up until then, if it happens with one of the bond offerings or even two of the bond offerings, there's other ways that they can engineer this to not have to sell the Bitcoin. It all depends on what that outlook is, right? If something is fundamentally broken with Bitcoin, if there's an exploit or something that happens, that's a whole different story, right? Clearly. Yeah. But if it's just that we're in a bear market and therefore there's not a lot, they can't use the ATM because that premium has compressed, right? Now it's back down to around net asset value or maybe even below it. We've seen that before. But if that happens, they're going to look at other ways to do this. It could be that they roll the debt. Maybe if they've got cash flow, they can go issue a different fixed income product, right? That's not a convertible one. And they can just offer coupon payments for 5 years and they can clear out that debt. But if they can handle the cash flowing of paying those coupons, then they've effectively rolled that problem out 4 or 5 years, right? So you have to continue with that, then go to the traditional fund. There's ways around it, is kind of the point that I'm trying to make, is there's a lot more creativity out there, and they have a lot more products left that they've never offered because they've never been in the market conditions where they've had to offer them yet. So I think it's a really good exercise to go through for people, right? I don't discourage discussing the bear case. I think it's important. If you're going to have conviction, you have to stress test it. You have to think through. If you're Michael Saylor and Bitcoin's now trading at $15,000 a coin, what options do you have? So you got to go back to that toolbox and go, well, if people aren't lining up for the convertible debt because now it's not performing and you can't use the ATM, then you've got to start getting creative and you got to look at what else is available to me in the capital markets. How can I leverage my relationships with these financial institutions and use more traditional means of taking on debt, right? What can I do to get myself out of this or at least buy myself time for a recovery to happen in the market? And I think that's a great exercise for anyone who's going to take a trade and have conviction in it for the long term. You have to battle test it so you feel comfortable with what the risks are.
What do you think MicroStrategy could do with all this Bitcoin in the future? They have all this Bitcoin, this massive stack of it. They could, I don't know what they're going to do. Maybe they could hire the best talent. Maybe they can think of ways to build Bitcoin. What are your thoughts on that?
Yeah, that one's a very interesting question because a lot of it depends on how the institutional adoption happens, right? So you've already got we've gone through the battles of the lenders before, right? We had a lot of bad actors in the lending space. And I think that really took a toll on that industry as a whole because we did have a lot of bad faith actors out there. And, myself included, it gives me a real sore spot for that. But when you've got financial institutions like Cantor Fitzgerald coming into the mix and wanting to lend against Bitcoin, right? Well, when you start to see that happen, as regulations start to change and traditional financial institutions like banks, if they'll allow the value of Bitcoin to become lendable, a part of their lending base that they can now lend against, now just shifting custody of your Bitcoin could generate you a yield. Because if you can shift that Bitcoin over to a JP Morgan, and the value of that Bitcoin you move to them becomes a part of that equation for how much they can lend, now they can generate a yield on that value, and that yield can trickle down to you, right? And so you start to see some of the more traditional products start to enter the markets with that. But I'm not going to pretend that I know what all the answers are going to be here yet, right? I don't, but it's something I'm starting to spend more time thinking about, because we've finally got a tailwind with Bitcoin, where we've got a friendly administration that's entering with a lot of pro Bitcoin people that are in very powerful positions. And when you have that, you have to start re-looking at all the regulations that have been out there that have prevented this from being adopted into the financial system. And so I think it's going to start to look far more familiar to people than what it has traditionally, because they're going to start to get the types of accounts and the types of products that are laid on top of Bitcoin that they see with their traditional financial arrangements with their banks today. So I kind of look at what's the low-hanging fruit that's going to be out there, and I think that's kind of it, right? That's the low-hanging fruit, is getting into those products. But what we could also see, there's been a lot of people that have been pushing for MicroStrategy to do things like fund lightning channels and try to generate additional Bitcoin that way. That could become a possibility, right? We might see some different side chains that pop up that need liquidity provided to them, and maybe MicroStrategy starts to fill that role for a lot of these. Maybe they're private chains for corporate or for nations to trade, and they need vast amounts of Bitcoin to be providing liquidity on these channels so that they can trade off on their own chain that's not mixed in with everybody else's, right? I think there's going to be a lot of opportunities here, but it's probably going to be a couple of years here before we start to really see the emergence of those actual products in the market.
Yeah, I definitely agree. It's not going to happen overnight. It's going to take some time. Would you do you happen to have an estimate for where the NAV premium should go? I mean, the way that I see it, it's markets are forward looking. We don't know what MicroStrategy is going to do in the future, so I don't really think there is a way to assign the right premium. I don't think there is a right premium at this point, because we don't know what they're going to do. Bitcoin provides optionality, so you can literally do whatever you want with it, right? You can give it away. You can start. I don't know. These are things that I thought maybe they could. Maybe I heard somebody say this, but maybe they could do something like an insurance company. Maybe they could do something like a Bitcoin bank. I mean, what are those worth?
Right. Well, and they're kind of becoming a Bitcoin investment bank at the moment, right? By issuing these, they're securitizing the Bitcoin that they have, essentially, is what they're doing with the convertible bonds. So you might see them expand the offerings that they have through that product line here. But I guess when I look at how am I going to value MicroStrategy and the premium's been a moving target all the time. And quite frankly, one of the limiting factors to the premium is Saylor himself, right? Because they're using these products like the ATM and issuing the convertible bonds out there, they actually have an impact on how high that multiple goes. I kind of look at it as you've got the camp that looks at the 1 times MNAV, right? Those are the people that are only looking at the value of the Bitcoin, but they're excluding the value of the capital markets activity, right? He's essentially creating a product playground for Wall Street capital, which is a huge amount of capital. And that volatility is what those firms need to generate their returns. So what you're trying to do mentally is value, what is that worth? What is it worth to generate returns through a product like your equity or your bonds to billions of dollars of capital that's starved for returns these days, right? There's very few companies that are providing a lot of returns in the markets these days, right? When you go look through the S&P 500, most of the returns is coming from like 7 of them. So they're starved for returns in their products. Now you've got someone offering them volatility, right, through Bitcoin securitization into these bonds. And what you're trying to do is value that customer's view on this, right? You got to get yourself out of the consumer minds or the retail mindset where we're all hyper-focused on the value of Bitcoin itself, right? That's one piece of this. What we're trying to value is what is institutional capital returns worth to Wall Street, right? What's going to keep them coming back to the product that's going to keep giving MicroStrategy these favorable terms that's going to allow them to continue to grow the scale of their operations. And that's a very hard thing to do. right? I don't think there's a formula yet for that. And we're going to find out. We find out often when it comes into like the blackout periods where MicroStrategy is not going to use the ATM leading into things like earnings, right? You might have a couple of weeks before earnings where they're not going to use the ATM at all, and they're not going to issue a new convertible bond during that period. So what you have is essentially all the inorganic sale pressure come out of the market, right? Because they are the inorganic sales pressure, right? So once that selling pressure is out of the market, you start to get a sense of how does the market actually value this company? Because now the price starts moving in that direction. So if you look right before their last earnings, it started going straight up on a 45-degree angle, right? And then they did more convertible bond offerings. He went heavy on the ATM, right? He's running through the $21 billion he's got there. And so that becomes a limiting factor on how far that can expand. So I think that premium is going to stair step for a while. I think that you might see it, it was in the threes. I think eventually he might lay off and it might expand into the fours, and that'll kind of reset a floor where it'll bounce between 4 and 3 now. There's a lot of people out there that think it's going to be 10 to 20 to 30, and I'm not going to say that that's not going to happen. I don't know. But I do think that there's going to be a range that this is going to end up settling into eventually as people digest this strategy and these products that they're offering. So I'm kind of viewing it as falling somewhere between a 2 and a 5 and kind of oscillating through there depending on what Bitcoin's doing. I kind of see it as a sentiment indicator for Bitcoin, because when you get really positive feelings on Bitcoin and the price is moving and everyone's excited, you see that multiple expand, and then the minute it shakes up, it compresses again, right? So I think we're going to see it ebb and flow quite a bit, and trying to figure out what the right MNAV premium is going to be, that's going to be a very difficult thing to do.
Yeah. Have you considered whether, for let's say, for example, for investors of Microsoft, if Microsoft doesn't buy Bitcoin, if they just say, no, we're not going to go into it, what reason does anybody have to buy Microsoft stock anymore? I mean, they get the legacy business, but if they just buy Bitcoin and hold it, why take the risk of investing in a company like Microsoft? I know, like, the volatility, people don't like the volatility, people like the stability. Do they have any other reason to buy the stock other than maybe feelings?
Well, I think that you've got to look at the incentives behind individual investors, right? Everyone's in a very particular spot to themselves. So something like a MicroStrategy might be way too wild for someone who's in their 60s that's entering retirement. And even if they fundamentally know that the volatility is the product, so you expect it, it's tough to stomach the swings, right? I mean, you see that sentiment out there on X all the time, right? When this thing's swinging, people go from the highest of highs to the lowest of lows in 10 days, right? It goes fast. So if you're in one of those positions where you're looking for stability, MicroStrategy is not what you're looking for. Microsoft might be, because they've got a very stable business, right? That people can understand because it's a product that they've used, that they still probably use today. They've become familiar with how MicroStrategy operates as a company. Their guidance has gotten refined, so you believe the targets that they're putting out. They issue dividends. People like dividends, right? So I think when you get to that point in your life and you're no longer necessarily in the wealth creation phase of life and you're more into the wealth preservation phase of life, I think that you look at these companies a little differently. Like, I look at Microsoft and I go, they have nothing to offer me, right? Right. Like right now they don't, because I'm in the wealth creation phase of my life. But I also spend a significant amount of time analyzing business operating models, right? So I start to dig into the fundamentals of how these things are performing and looking for those outsized opportunities. Most investors are very passive. And so if you're a very passive investor, you kind of default back to investing in what's familiar to you. Apple makes sense to people. They've got an iPhone in their pocket. They've got a Mac computer. They understand that company. They might not know anything about the financials, but they know people are using phones and computers still. So they can be comfortable enough with that. Microsoft, they know the products. They can be comfortable with that. Amazon, they've got packages showing up to their door every day. They can understand the value that's there, right? So I think there's something for everyone out there. I don't try to tell everybody I know to buy MicroStrategy all the time, right? because I know that certain people can't stomach what this product is. And you have to be ready for that. It's almost hilarious now that Bitcoin's become like the safe thing to push people into. You're like, look, if you don't want the volatility, just buy Bitcoin, right? Then you'll be fine,
Yeah.
right? Because to us, that feels like no volatility anymore because we've been at this for so many years now that we've become, this has readjusted what our normal is for volatility in the market. But we do have to acknowledge that for 99% of investors, they've not gone through that yet, right? So that's not a new normal to them. It's not something that they're willing to stomach in their own investing lives. They're not willing to watch their capital go down 40% in an investment, right? So they are going to look for what's comfortable to them. And
Yeah.
I don't begrudge anybody that approach because you have to recognize the different situations of each individual investor and they have to
Of
come up
course.
with the right solution for them. Right. The saying I always say on X is investing is an individual sport. But what we're trying to do is we're trying to make research and due diligence a team sport. Right. So we're trying to put the information out there. But from that point, people have to make the determination for themselves of what's going to fit into their financial model the best.
Yeah, that's really well said. But what my question was, why wouldn't somebody just buy Bitcoin over Microsoft? Microsoft is still pretty volatile. I mean,
Sure.
if once you understand Bitcoin, I mean, I guess once you understand Bitcoin, that's the main thing here. Once you understand Bitcoin, you understand that Bitcoin is actually less risky, in my opinion, at least, than Microsoft, because Microsoft has counterparties. You have
Yep.
the fact that there there could be human error in their judgment. There could be regulations that stop them from operating, right?
Yeah, I think you're right on that. So going in with the assumption if MicroStrategy is adopting Bitcoin, they're
Mhm.
just converting cash to Bitcoin. If the question then is why would you buy Microsoft over Bitcoin? Well, if you
Yeah,
were going to do that, you would have to have some reason to believe that the fundamentals of the business is going to provide more upside value than just the growth rate of Bitcoin, right? And that's tough to do. So
yeah,
that's a hard thing to convince yourself of. I would have a hard time with that, right? I would look at it and go, I understand Bitcoin. Bitcoin's enough for me. I don't see, with all the things you mentioned, the counterparty risk, right? You've got new products coming out all the time from all these startup companies that might unseat some of their really
yeah,
entrenched products, right? That's a risk. And you have
yeah,
to weigh that. So if you're buying Microsoft because they're converting cash to Bitcoin, you do have to ask yourself that question, right? What do I think that they can provide me in returns beyond what Bitcoin itself is going to provide me in returns? And if you can't come up with an answer to that, if you can't find a way where Microsoft outperforms somehow, right? They've got Bitcoin plus this other X factor, then it's probably not the choice to make, right? You should really, Saylor said a lot of times, Bitcoin's kind of becoming the hurdle rate for a lot of people.
yeah,
So every investment that you're making, if you're a real big believer in Bitcoin, you've got to put it through that lens of what do I think this company brings to the table in terms of their strategy that gives me that potential for outsized returns? Because
mhm.
otherwise, why would I take on those other risks into my portfolio?
Yeah. I mean, that's how I see it as well. I mean, I get what you were saying about MicroStrategy. MicroStrategy isn't for everyone. I think Bitcoin is for everyone. I think everyone should have Bitcoin. I think they should have at least a little bit, even if they have a million satoshis, 100,000 satoshis, 500, whatever they can afford, just accumulate. And that's the key here.
It's reaching that point where it's no longer this, internet magic money it was made out to be years ago, right? Because now people are turning on their TVs and they're seeing their favorite people out there talking about Bitcoin in the mainstream. And it's almost every day. It's become the topic that people love to cover.
Hmm.
And when it reaches that level of escape velocity where it's now becoming a normal part of daily conversation for mainstream media, you're starting to see the inclusion of bills making their or legislature making its way into Congress. Like it's a different thing now, right? A lot of the risks have started to get flattened out, right? There was originally this thought that you're just in the highly speculative area that the US can crush whenever they feel like it. But now that so many countries are starting to see the value in here and their citizens are using it, and people are starting to realize this isn't a USA asset, this is a
Yeah.
global asset, it starts to become a much more comfortable investment to introduce in your portfolio. And it starts to make that point that you might want some, right? Because even if all you're seeing now is the more friendly regulations being released, You're not seeing the same attacks coming from like the SEC or all these other politicians that were pushing these, very negative agendas towards Bitcoin and digital assets in general. Once you see that environment softening for Bitcoin, you can start to build more conviction in what the outlook is going to look like, right? A lot of those risks are starting to fade off. Bitcoin finally has its very first tailwind. I mean, it's a magical thing that we crossed $100,000 and we basically had a decade and a half of headwinds, right? Everything was going against Bitcoin for a decade and a half, and it didn't care. It got adoption anyways. So
Yeah.
I think you're right. I think people should have an allocation to Bitcoin. And I think as long as you've put in the time to really understand it and take a macro view, it's becoming a very easy thing to say yes to for a lot of people.
Yeah, that's it. That's it. Over time, I think more and more people are going to understand this. I think they're going to be forced to understand it because the medium of exchange, the unit of account, the store of value that they use today, they can't plan with it. You can't plan with dollars. You're forced to buy companies. You're forced to be a part-time investor or even a full-time investor, full-time finance, um, I guess, financial institution or a financial advisor to yourself, just to make sure that you don't go bankrupt. I have this question that I ask all of my guests. And the question is, what do you think is the most important downside of the downstream effect of Bitcoin over the next 10, 20, 30 years? How do you think Bitcoin is going to change the world in the biggest way?
I think Bitcoin becomes an asset of peace ultimately.
Mm,
I think that so much of what we see in the world is driven around monetary gain, and it pushes people to do very greedy things.
yeah,
And I think that Bitcoin being decoupled from that type of a system and being an asset that was released to the world for everybody, right? There's no controller of Bitcoin, there's no active management of the Bitcoin supply. It is truly free to the world for everybody to use in the way that they seem fit. I think that that is ultimately going to lead to a much more peaceful existence for people because people aren't going to use Bitcoin to hold power over others, right? I think it is going to open up that layer of freedom to the world. So, it's a little bit of an altruistic way to look at Bitcoin, I think, but I think it's kind of what the world needs right now. We've seen so much of the dark side of the disagreements over, fiat currencies or the values of the materials that are in the ground and what kind of darkness that can really bring to the world. And I think having this free, open monetary system within Bitcoin is going to be a huge stepping stone in changing the way that the world operates with itself.
absolutely. I think that's a really great answer. I feel like the peace that Bitcoin is going to provide people just from being able to save for themselves, not having to commit petty crimes to feed their family. I mean, that's just going to change things completely. Like we have cities like what San Diego, no, where is it? San Francisco. Is that where there's a lot of crime?
A
Are you in
lot.
the
Yep.
States? You're in the States, right?
I'm in the States. Yep.
Yeah,
Yep.
San Francisco has a lot of crime, I believe.
Yeah. Oh, yeah, it does. San
Right, and
Francisco, New York, there's a
yeah,
lot of them right now.
yeah, and part of that is because people can't save. They can't save for the future. They can't plan for their family's stability. They can't give their family stability because the savings that they have, especially if they're living paycheck to paycheck, their life gets more expensive, but their paycheck doesn't increase. That's
Exactly.
the worst position to be in.
People in a position of desperation, right? You have to have empathy for that position. A lot of people can't understand the headspace that you get into when when someone's truly desperate.
Yeah,
And I think you're right. I think we're seeing a lot of that right now. People are getting desperate, right? We just went through a very rough time across the world that devastated a lot of people, right? People lost businesses through no fault of their own. They might have had a really great business and they just got shut down.
yeah,
And I don't think there's limits that people are willing to go to when it comes to having to provide for your family. And I think you're right that when you can never get ahead, if you never have a way to be able to save and outrun the devaluation of the assets that you do have, you get put in a very tough spot where you have to make decisions that look terrible to other people, but in your mind at the time, it's the only thing you could do. And
yeah,
so I think you're right. I think that this does open up a layer for people to have something that they can decouple from that system that has really penalized them for not necessarily even doing anything wrong. And I think that's going to be a very powerful mindset shift for a lot of people.
Yeah, it's going to change lives. I really think even if people don't adopt Bitcoin right now, over the next 10 years, 15 years, whenever they get paid in Bitcoin, whenever they start getting paid in Bitcoin, they'll be much better off compared to somebody who doesn't have that mindset, or in a world where Bitcoin didn't exist, because their government's going to continue stealing from them forever without them even knowing.
Absolutely.
That's the biggest part. They have no idea. Most people have no idea that the money that they have continues to lose value no matter what. They don't see it, they don't understand it. And if you try to mention it to them, they just wave it away. They think, "Oh, yeah, it's inflation is normal. We need inflation."
You're being pickpocketed by an invisible hand, right?
Yeah.
You can
Yeah,
never
that's it.
see it coming. It's a problem. And luckily, the discussions have started opening up. I think people are starting to realize, right? I mean, this is why a lot of the wealth accumulation, right, and the gap that's happening, that divide that's happening in the wealth across the world, is some people learned that lesson earlier. And that is an advantage because you really do have to understand the devaluation of money and the mechanics of inflation before you really understand why people with all the money have it all invested, right? You learn that you have to own assets instead of holding on to the cash because the assets, at least the valuations on a lot of those, is going to rise with the devaluation of the denominator of what they're valued in, right?
Yeah.
But most people don't have that type of background. It's not something that's typically taught in schools, right? If you don't go to a university, and even if you do go to a university, a lot of times you'll never hear that discussion. So people never learn how to allocate their own capital, right? Everyone's their own personal capital allocator.
Yeah.
And that's a big responsibility, particularly if you have people that are depending on you to be successful in how you allocate that capital. And you have to spend the time to learn this. Unfortunately, you've had to learn how to do it on your own. The beauty of the internet and what you're putting out and what a lot of other people are putting out is that that type of information and those different thought processes that you can hear from different people who have started to figure these things out, that information is now getting open sourced, right? It's no longer closed. It's not a secret of just a wealthy community. This is now you can come online and have open discussions about the topic, hear other people's approaches, and you can figure out what the right one is to apply to your own life. So we're getting to a better place from an education perspective, from a sharing perspective, right? Nobody's gatekeeping information anymore now. We're trying to share it, right?
Yeah.
And I think Bitcoin's really brought that along. This has really been a big community effort from it started with a small team of people that were working on this in the dark, right? And now it's a broad discussion that's opening people up to information about economics that nobody was ever going to learn if these discussions weren't happening and if we didn't have a solution, right? The solution is what causes the discussion. You need the understanding of what's happening, and then you can understand why Bitcoin's the solution to that. And so it's a very powerful education that gets wrapped into this asset, and it's very important for a lot of people moving forward.
Yeah. Yeah. That's so important. And Ben, I want to thank you for your time, but I want to ask you one last question here. Do you have any final tips for my audience? They're generally trying to understand MicroStrategy better. They're trying to understand Bitcoin better. Do you have any final tips that you can leave for them?
Yeah, I think the biggest tip that I can give is to stay engaged in the communities that are out there. There's evolving thinking on all these types of investments all the time, and there's huge groups of people doing great work to put out their thoughts and their strategies around this, right? Everything from trading strategies to general investment philosophy, right? I think that continuous education is going to be your best edge in these markets. Most investors don't spend the time to learn anything truly deeply. They go very passive. So when you do spend that time, you're going to have that edge that everybody talks about, but most people don't really know what it means. It's that information asymmetry that you can get. So stay engaged, always be willing to learn. And if you're putting capital into something, make sure you at least spend a little bit of time to really understand the foundational components of the strategy of that company. And that'll get you a very long way.
Yeah, I think a lot of people are just buying into things like XRP, all these random crap coins that have no value, that are doing nothing, and they're trying to replace Bitcoin, but they I don't think they will.
You have to go through the pain of those sometimes.
Yeah.
I did. I mean, early on, I got smashed on more of these altcoins because you get excited and you just start investing in everything, right? Because
Yeah.
everyone's making all the money. And it's a painful and costly lesson to learn. So if someone's out there watching this who hasn't learned that lesson, learn it from me. I'll tell you, I got smashed a bunch of times. And it eventually brings you back to, what asset do I really understand the value proposition of? And if
Yeah.
you're looking at an XRP or any of these other ones and you don't understand the value proposition that brings and why the world needs it, it's not something you should be in. So I went full circle. I'm a Bitcoin only guy. That's really all I need. I understand the big picture there. It's important enough that I'm willing to have that be the only one that I need to be in.
Yeah, very well said. Ben, I really appreciate your time here. I thank you. I thank you. My audience is probably going to find this very, very useful. I think there were so many concepts that we touched here that I haven't touched in my channel before. Can you let my audience know where they can find you?
Absolutely. Yeah, I'm pretty easy to find. I'm really only in one place. I'm on X. That's where I do all my content. We do live streams where we're mostly discussing Bitcoin and MicroStrategy. So you can just find me at Ben Werkman on X, and that's where you'll find all my information.
Awesome. I'll link your Twitter in the description below so that my audience can find you very easily. Thank you so much for your time, Ben. I really, really appreciate it.
Thank you, Rajada. Thank you for having me.